following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 13th day of December. The year is almost done. Wow. Thank you to our host. Great programming all the way through. Hopefully you can keep that up. And what is today? Today is Tuesday. So, of course, we go all the way through to 6 o'clock today. Dow's up 66 at 19,864. I'll talk about the 20,000. I've already spoken about it. Remember, I mentioned about the Barron's headline for subscribers over the weekend. I showed it. We'll get into that. So what we're looking at here is the Dow's up 66, having made an all-time high under 20,000, getting closer and closer. The S&P is up 10 at 2266. The comp index is up very sharply, up 54, up 1.01% at 5488. The VIX is actually up 23 at 1287. This is going to be very interesting. The short-term trading index is up at 131, very high. So it's going to be fascinating. So we've got the futures up 11, E-minis. We're testing this inside channel. Now, I've got this webinar going on. We started a week ago Tuesday. Another one's coming up exactly a week's time. If you're really interested in just learning about, yes, we'll do the Chapman wave methodology, the way we look at the simplicity of the actual waveform, going from the most identifiable lowest low, here it is, going to a peak A, 1 penny higher starts peak B, 1 penny higher starts C, and you can expect at least 4 peaks. When you get to D, other things can happen. You want to know something, what can happen? Just have a look at this. Of course, I said it now. I better find it. I think this is it. Let's have a look. Look at this. This is the S&P E-mini. This is the S&P cash. What's the objective is to get you to a D. I can't go back all the way. Actually, let me go back. So if you go from the low that was made back on the 6th of December at 1035, and you start counting, you go to a peak F, pulls back. So it got to the D, but then it went 2 higher peaks, it went to an F. Then what did it do? It ran up to a D, now the sharpest decline. Then it did it again with the Chapman wave instant restart. So now we've got out of 1, 2, 3, so far out of 3 peaks in the 5-minute chart, we've got a peak, we've got 3 peak Ds, one of which also went to an E. Then it goes to an instant restart, goes to another D, down arrow. Goes to another D, down arrow. What have I just got? I got 5. I've got 4 out of the 5 that have already gone to Ds. One has gone to an F. Then it goes to another D right there. So you've got 6. Then it goes to another D. That's 7. Then it goes to another D, but then it goes to an E. So out of 9, we've got 7 that have gone to E's, but all of them, of course, had to go to a D. Then you've got a D right there, pulls back. Got a D right here. The very last D was right here this morning at 10:05. No, it was yesterday at 10:05 at 2264.03. Pulls back sharply. What does it do? Pulls back, pulls back, pulls back, and starts another buy mode that goes to move over there. It goes to a D, and then it goes A, B, and that's a gray B because it's under the previous high, and it goes to, at an opening price, you can often get a spike to the upside that breaks the rules. In this case, it went to a peak E. So I can't remember now. Out of the last, well, let me look at the down arrows. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, let's just call it 11. Out of the last 11, 3 of them, all of them went to Ds. And of course, if they go to E or F, they went to Ds and then passed it. And then 3 of them went to a letter above it. 2 went to 1 letter above it. 1 went to 2 letters above it to the F. And then each time. Now, I wanted to also show you what I've been teaching in the class. We spent a lot of time talking about trend lines. Look at this trend line going from the top that was made at 12.50 in the S&P cash on the 8th. It went right to that peak, then exactly all the way to that peak right there at 12.12. That's yesterday at 10.05. And it pulls back, makes a cup formation and breaks out. And where does it stop? It stops dead right on the trend line, the Chapman Wave inside track, a technique that I've been teaching. Now, if you're interested in this, I see that we've got a most fantastic thing going on. I didn't realize it was about to start. It is starting. It started already. This is the Tiger Dollars. So purchase Tiger Dollars and we'll donate 10% of your purchase price to the Salvation Army. This is TFNN. Sign up by December the 22nd and get a 25% bonus match. So if you become a subscriber, not only do you get a discount there, but you will get my webinar automatically. You'll get my newsletter automatically. You will also get, if you sign up for my webinar, a $100 discount. Probably a discount, and you'll be able to take it. So you have a whole week in which to review what we did last week because it's all archived. And it was very clear. I spent a lot of time making it as clear as I could. And then you'll be ready for Tuesday night for the continuation. And what do I do Tuesday night? I start to add right here. Let me see if I can find it. Webinar 2. What I do, I add, we will spend more time on each chart. Having studied the core structure of the Chapman Wave, we will, 1, take the bear chart, add letter notations. Number 2, add some technical tools. 3, notate the trend lines of importance. 4, identify confirmation and failure patterns. 5, if possible, we will introduce the concept of time frames. Number 6, buy modes end with sell signals begin. And but mostly what we will do is we're going to study the waveform, count once again with the peaks and troughs. We're going to talk about rally failures, buy signal upgraded to a buy mode, introduce the sell signal and sell mode. The significance of a peak D, this is that fourth highest peak. I just discussed it how many times, and you see Ds, it's just incredible. The alternate wave count, the Chapman Wave instant restart. Number 4. Trend lines, inside track, cups, and arches. That's what we spent time on as well last week. And then moving average. I introduced you to the moving averages. 9-period moving average, very important. 200 period, that's the short term. And then the long term, 200 period exponential moving average. The MACD, the slow stochastic on balance volume. And then, of course, many other things. So this is going to be really exciting. I'm looking forward to it. And most importantly, the timing, as I said before, couldn't be more perfect because I said this is a period where we're on buy modes in the Dow. We're still on a buy mode in the Dow. We're on buy modes in the IWM. That's the Russell 2000, which made a peak C. I am anticipating somehow or other we get to, where did it go? We get to IWM. We get to a leg D above 138.82. Even 138.83 starts a D. And that's where we've got to come way, way more cautious. Why? Because look at the weekly chart. Look how we've stopped right there. What I showed my subscribers this morning was really fascinating. If I can find it. Well, I'll look for it during the break to see. Yeah, there it is. So what I showed them was this red channel trend line. And this trend line said that we're right now on the cusp of touching it. Well, today we broke above it. It's really important. This is the S&P monthly. I'll be back. We'll talk about it. Basil Chapman, Dow's up 3 S&P's.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just show you that chart one more time. Where did it disappear to? There it is. This is the very long-term chart of the S&P. This goes back where I was drawing all these different channels. It's just been unbelievable the way it's stuck within the channel. This is the first time there's been a bit of a break of the channel, but I can still draw it. I didn't want to do it right now. I just want to show you that this trend line right here, this dashed red line, let me see, can you see? Yeah, it's a black background, so it's a little difficult to see. I love it because black background allows me to use all different kinds of colors that mean different things. I can't really do that. It doesn't show up with a white background. But anyway, I've used white background now for a long time because I had so many requests because people looked at the charts and wanted to see the waveform much clearer. But this is leg C and a breakout in the S&P. This is really positive. So that's what I wanted to say. And we've gone above that trend line. That's suggesting to me that 20,000, 20,000 for me is absolutely nothing. 10,000 was way, way more important. 20,000 for me was actually a target that I had way, way, way back, and then I had to forget about it because the Dow went down to the 6,500 level. But most importantly, the reason why I say forget about it is because I firmly believe, having spoken now to a number of, I call them lay people, just friends, people who really have nothing to do with the market, who have suddenly started to talk to me about the market, very first time in who knows how long. So I think getting into the 20,000, once we're in the 20,000, it's a done deal because now you've broken that barrier. So getting to it, since I'm in the leg F/B in the daily, I only need leg D to go in the IWM before I start to become a lot more cautious. We can stall, that's not a big deal. But 20,000, it's just a psychological number. As far as I'm concerned, it really doesn't mean very much. What really does mean a lot to me is this chart here. Look at this mirror image. This is the dog, the 100% short the Dow. This is, of course, 100% long the Dow, the diamonds. Look how close we're getting. We're starting to get to one of those levels where you start to deflect away. So that's really what I'm looking at. And how we do that and how much we do is going to be the interest for me. Do I keep my subscribers long? Because we got in at a very nice point. And just hope we don't break into the 19,000 level again, but we just have a sideways to down consolidation towards 19,500, 19,300, 200. and then market just takes off on the upside. Why mess around going in and out? I don't mind shorting for a completely different position. We can have a short and a long. They're at different levels. I might want to do that. The 120-minute chart is possibly making an F or a Chapman Wave 5 right now. So a lot of things are going on. All I can say is that I'm trying to deal with it as rationally as possible. And as I say, the IWM technicals are very good. There should be just one more bounce to 138.83. I don't know. I might be wrong. And that's where I started to become a little bit cautious. Do we get out of the long position for a nice profit, or do I try to stay in and try to add to it on declines? That's going to be the big thinking as far as I'm concerned. Or is this the moment, the exact moment that says, hey, Dow 20,000, forget it, because even if we touch it, we're going to come down very sharply to scare the dead outs out of everybody yet again. I have to make those decisions, and I probably will make them over the next couple of days. Now, let me just finish up here. You got the QQQ. It made a peak D, pulls back. Huge leg E to the upside. It's up $1.79, up 1.5%. The Dow's only at 0.40. S&P's at 0.53. This is a whopper. And the IWM, in fact, when I last looked at the IWM, it was just up a small percentage. So what we're looking at here is the rotation has suddenly picked up. All of a sudden, that 120-minute chart looks good. It's at resistance, but it's acting very well. And I didn't finish my thoughts just before to say that in the 120-minute chart, we've got a cup formation. I've got an alternate count E, a G/B in the 120-minute chart of the December E-mini. I'm going to have to change very soon to the different contract. I love using the continuous contract, but the real one is trading at 2270, and this is trading at 2264. So 6-point difference, 5.5-point difference. I can't do that. It's just too big. But sometimes for trading, I'll stick with this because I can also get the monthly, which is in a huge leg C to the upside. So, okay, now let's get to the nitty-gritties. You've got gold. When I last looked, gold was trying to rally. Yeah, it's come off the bottom. It's -5 at 1160.3. This is a period that says, you know, gold is not that attractive at this particular point, but I think it's getting close to some kind of a bounce. The TLT, same thing. It's up 22 cents. Woohoo! Up at 117.91. It really needs to get to 119.70 to 120.95 to say to me, aha! Now we've got something going on that's interesting. Remember yesterday I used the TBT, which made it a G/C, and the the TBT is the ultra short Lehman 20-year Treasury bond ETF, and the TLT has gone to a trough F, but it's broken that two key support levels, so it's going to really struggle to get to the 123s at any particular point. I'm a little concerned here. I think that tomorrow is going to be very interesting. The way the market is acting right now, it's saying, ho-hum, Fed, we know exactly what the Fed's going to do. We might dip a little bit, but we could actually have another pop to the upside. I mean, this is nutty because it's saying that, look at the IWC. The IWC is the mid cap. No, I'm sorry, is the micro cap iShares, and it's at peak C. It needs a D. Look at the IWB, which is the, excuse me, this is the Russell 1000, more select, and it's in a leg E, maybe /A, but it's still very strong technically. These are the monthly charts are really, the monthly charts are suggesting 2017 is going to see higher prices in the first quarter. So, okay, now let's do something else. I want you to look at crude oil. Now, crude oil has pulled back from the high yesterday of 54. I should have typed that in. 54.51. I'm going to put that in, although it gets smoothed out, but I'll put 54.51. What I said was that I believe that crude oil, yeah, it did break out, and that raises the base. I said 49s to 44s. Well, we're going to 54, 51. That's a lot higher than 49, certainly. That's because of the OPEC agreement. And that's suggesting that, yes, we could, in fact, see crude oil, especially with Exxon and CVX. Yeah, I'm not talking about Exxon because of the potential for the Secretary of State. That's got nothing to do with it. I'm talking about Exxon as a, and I mentioned this, I think, about a week and a half ago. I said, you know, Exxon looks like a dividend stock that's a much better play than some of the other dividend stocks because it could be in a very wide trading range, and you've got some capital appreciation potential because the monthly chart has suddenly become stronger and above 95, let's call it 96. Then all of a sudden you've got leg C, so it's worth it. Now, of course, it's a little extended because it's in leg D. It's had a tremendous move since I mentioned that. I believe we're in the 87s or 88s at the time, and now we're at 92. But that is a consideration, saying that Exxon could in fact trade in a wide band between 95s and 83s over the next 6 months. And if you're talking about a dividend play, then that might be something to look at in the next pullback. Dow's up 92, S&P's up 13, Basil Chapman, Tiger Technicians Hour. I'll be right back. Let me show you the chart we were looking at before. This is now leg B in the 10-minute E-mini chart.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just finishing this up. Yes, so what I had a couple of questions. Good questions, because the questions pertain to Exxon, left side, right side, price, time match, using a Chapman wave technique. That's what I spent a lot of time on last week in my webinar, and I'll be doing it again this week. It's becoming more and more pertinent. So this is brand new leg B in Oracle, and you've got these old fuddy-duddies that have just come alive. I mean, IBM, look at, well, first of all, Oracle's looking very good. I believe that at 40.94, there's a real good chance that it's going to try for 41.20 to 41.50 over the coming 3 weeks. Let's see if that happens. Most importantly, if you're looking at IBM, the old fuddy-duddy there, this is a great move, breakout in the monthly leg B. the left side, right side price time match would say that sometime in early January, maybe mid-January, IBM has a chance to touch the right there. To touch the 176 area, it's at 168. That's 8 points. That's a lot of points. Sometime January, right? And most importantly, what I was also asked about was in Exxon. This is what I was looking at right here. There's a weekly left side, right side price time match with a Chapman wave inside wedge. This is the green target resistance line, and that says that possibly by the second week of January, Exxon. I think that's a little early. I think it needs a bit more time. But I'm going to say that just based on this particular technique, we could go to. Oh, I missed it. Yeah, that's right. That if Exxon's able to test in the next week and a half at 92.32, if it's able to break above 93. Then there's a real good chance that it goes to 95.55 by the second week of January. There you are. And the support that it has to hold is between 90 and 89, the gap up. All right. So now let's look at a couple of other things. What am I leaving out here? Left side monthly in Exxon. What it would be this low right here. I think it actually takes you to the same thing. I think I'm using the same thing. No, I'm not. Okay, good point. What is it? Gee, that's 104.76. I don't know about that, but I'll answer your question. I never go that high until you've gone past a particular lower point. But if you do want to know about the high, that's already passed. I can't use that. I have to use that. Okay, so I'll use that. Can't use that either. Okay. Exxon, if I'm really looking at the best circumstances, and I'm only doing this as a question, an answer to a question, I'm not projecting it at this point, I would say by July, Exxon could be testing 104.76. I have to go one step at a time. And all I can say is that the one step at a time says, it says there's a chance that it could be done. I don't know. Let's go one step at a time. All right. Let's see. Next week we've even gotten to 93.80. It's at 92.37 right now, because it has to hold leg D, and then if there's a peak D, what happens? All right. Let's go on. So, one step at a time. Julie wants to. Exxon. I just did that. So Tillerson for Secretary of State, ex-CEO of Exxon, will then generate multi-year uptrend for Exxon. We've confirmed. We've never had that before, where someone in the business then becomes Secretary of something as important as Secretary of State. What happens to the stock? I don't know. I don't think so, because remember with Cheney, all the yelling and screaming about it continued for about 20 years. Cheney with Halliburton. And in fact, he had left Halliburton, didn't have anything to do with it, and it just went on and on and on. Cheney and Halliburton. All right. Sarah wants to know about IBM. I just did IBM, but Microsoft fits into that whole category of the oldies becoming the newies. Look at Microsoft breaking out. This is ABC fails, goes to a D, AB. I think there's a brand new B. Weekly chart is ABC, leg C in the weekly chart. This looks very good. I don't know what they're doing, but whatever it is, they're doing it right for the first time in a long while. Breaking out leg C in the weekly, leg C in the monthly. Microsoft, trading in 63.19. And it has tremendous support in the 61 to 60 area on a short intermediate term basis. We'll see if that holds on any next break on the downside. Next question is BAC, Bank of America, making a peak F. So that's 23.24 on the 8th. Peak E, 23.25. I thought so. There we go. That is an F. Oh, it could be an alternate count. I'm just for now calling it an F. There's no position we have, but I am calling it because I think that the banks and the steels have already had a fantastic move. Look at Exxon. Look at U.S. Steel. 3 days down, 4 days actually with the turnaround from 4 days ago. 33.90. Not a big deal, but it is turning down. Look at SLX, the steel index. Peak E, pulling back. Look at AKS. Remember, I've been warning about this. Peak F, pulling back. So I think that the whole thing about this rotational market is that as something is about to turn down, see GE being fantastic, now it's just pulling back a little bit at 31.69. We have long positions. It's down 17 cents. We spoke about GM. GM, peak C should go to a D. But why is GM acting so well when rates have gone up? This is a fascinating market. And as something's pulling back, another sector starts to improve. Today should have been the IWM's opportunity to go to leg D. Instead, you've got the QQQ on an absolute tear to the upside, a breakout tear to the upside. Leg B in the weekly, leg C in the monthly. I have to tell you, for anyone wanting to short this market, there will be an opportunity to short, and it might be tomorrow after the Fed makes this announcement. But look at these charts. Look at the, I'm only trying to be as objective as possible. Look at the weekly chart. Look at the way the MACD is improving in the QQQ series. Look at the monthly chart. The MACD is flat, but it always holds the last major trend signal, and this is an uptrend, a buy mode. The stochastic's flat at 94%. More than that you couldn't wish for. This is really good at this particular point. I'm just saying. Okay, look at the VIX index. People are buying the VIX because they want insurance, 12.93. And that's always a tip-off to say, hey, be careful. We could have a nice bounce here. So I'm going to be watching all these different things. Look at the TLT. It's right at a point where, yeah, it looks terrible, but there is a point where it could have a little bit of a bounce. So I keep getting asked about my Japanization of bond yields. Look at the TLT. That monthly chart, I have absolutely no choice now to put an E. And I have to put an E with an inverted caret. Something spectacular has to happen for me to lift this. That means that the monthly chart of the 20-year iShare Treasury Bond ETF has gone to, well, the month is only halfway through. But based on the candle of last month, based on the action so far this month, I have to say, I think that this is a sell signal, that the Japanization of our bond yields might be over. Nothing light. I've got to put that into perspective. And yes, I will look at the XLU. It's not the same thing. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, yeah, we're looking at HOV, which are Hovnanian Enterprises, is the home builder. Spectacular move over the last 3 weeks, going from, oh, my goodness. Oh, wait, what am I talking about? A few weeks. It's about a month. And it's gone from the 1.50 area, 52 area, trading at 263 right now. I do believe that this could be an F at 262, up 10 cents. Weekly chart, I've got E/A. I'm going to call it E for now. And the monthly chart is in leg C. So that's a positive. Yeah, I think that it is turning the corner, but I do believe that it's going to try to test the candle wick of the 8th, which will say that it goes into the closes 230, between 237 and 215 at some point fairly soon. So that's what I'm looking at. So the question is, GTR's half plus 3.7%, 52 weekly high. What would prevail? Increase in confidence versus higher TYX, that's the 30-year, or the TNX, which is the 10-year, which went to 2.51%, highest since September of 2014. My thinking here is that there's a separation, there's a divergence between people wanting and prepared to pay up a little bit on the interest rate side of it because they see big capital gains, and the reality, which is that when rates start to go higher, it depends on the environment. For instance, in the 1970s, rates went higher, but real estate was a fantastic buy because you could ameliorate that by raising rents. Now we're in this rent stratosphere in many cities around there. It used to be just Northeast and different places that were major metropolises. Now I'm hearing stories right across the country. Rents and rates are going very high. There are some places like in South Carolina, North Carolina, where rates are coming up a little bit, but they haven't gone through the roof compared to the housing prices. So I'm thinking that at this particular point, the HGX index, which HGX right here, which has made a peak D, is going to be really important. Why? Because the peak D in the weekly chart that was made the week of the 29th of July at 256.81, it's having a tough time trying to get back there. If it pierces it and can go from the 246 area right now, the Philadelphia Housing Sector Index, if it can break and get into the 260s by mid-January, that's going to speak to a number of different issues. I think there's a chance that it could, but it might need just a little bit of a breather right now. So I'm wondering whether or not housing, let's put it this way. The Fed is only going to be playing catch-up if they raise rates tomorrow, because almost everything else, the rates have gone higher. It's just that they fixed the rate, and the rates that were fixed at the, what did I say, 3.50 area a while back are now up in the 4s. And that's kind of correlating to the reality of the marketplace. So I'm not sure if they really have a choice tomorrow. They're just going to confirm that it's up a quarter, and then they might say, We will consider another quarter, but it'll have to be in a while after we see the evidence. You look at HOV. Yeah, I just looked at HOV, Dave. Let me just do it again. So, yeah, that's what I'm looking at right now. And HOV, I'm calling it at this particular point because of the way the MACD and stochastic is, that there's a good chance is it leg F? And if it recycles higher, I'm still going to call the next one a G. I'm thinking that it's getting real toppy right here and that there should be some kind of a pullback. But it's also saying, based on the monthly chart, that Hovnanian, if I look at Toll Brothers, it's gone to a D and it's pulling back. It looks very much like the actual index itself. So that's Toll Brothers, TOL, trading at 3202. Made a high just the other day of about 33.5. You've got it in leg in the weekly chart. I'm calling it E/B. I'm quite comfortable saying it could be an E, it could be a B. My eye says that it's probably a B, but in terms of my work, when the MACD and stochastic are in alignment, I can say very comfortably, yeah, this is very likely a B. At this point, the stochastic's failing. MACD is good. So I'm calling it an E/B because it could be pulling back, and it's already gone to a C in the monthly chart. If you're looking at, say, Beazer Homes, another small one, BZH, well, it used to be small, now it's at 14. It's gone to a peak C, missing the D so far, and it's a E in the weekly chart. I'm not calling it anything else at this point, and a C. They've all gone to C's in the monthly. So it's been a very slow grind. The spectacular move that these stocks had going to January of 2014, there's a whopper of a pullback. You're talking about something that was in the 25s going down to the 6s. Now it's in the 14s. So it's a good comeback. So I think a lot depends. Let me just do this again. The dollar, it's not acting all that well. It's got a potential for a right shoulder failure pattern here. It's a peak E in the weekly, a leg D in the monthly. I have to wait the whole month before I can call it a peak D. But going to 102.06 in March and in December. In December says it's extended and you can't get a peak D until January. So I think that what I said earlier, late last week and early this week, well, that would have been yesterday, why this is such a very important week is because we have the indices getting really close to the letters that start turnarounds. The volatility index is towards the low. You've got the TLT, which has had a tremendous move down. It's gone from the 144s to 117s. This is the deepest move that it's had down ever. Let me say, I said ever. No, it's not. The move from 132.21 in the TLT back in July of 2012 to the low of December of 2013 at 101, that's 30 points. So that was that is a 28%. I'm doing it quickly. 20% or something decline. This one's gone from a higher level of 143 down to 117, and that's not the same number of points. But this is if the TLT breaks under, it doesn't even have to close, just breaks under 114.88. That'll be like an engulfing candle, basically, if you think about it, as one move down. So I'm watching this real close, and that's why I'm saying that this is going to be a very important week. I've got parameters that I need to watch. For instance, if I look at my Dow Quartet, GE's done extremely well, but it's bumping against the left side, right side, price time match, Chapman Wave inside wedge target resistance line right there. Hasn't broken above it. Weekly chart still needs above the round number 33 to make leg D. But it's had a very good move, but it's pulling back. Yes, down 15 cents. A little bit of a warning that tomorrow we might have a down day. And if you look at IBM, it's been spectacular. Even now as we talk, it's gone even higher. It's up 324 at 168.74. And I'm calling this, I don't want to call it EFAB. This could be a brand new B. I'm going to call it G/B for now, all right? So that's going to be very important because the MACD and stochastic are just breaking out. The weekly chart is in a brand new leg F/A. My eye says it's more like an A than an F. Look at Triple M, pull back sharply earlier today, down 99 cents, but did make a new recovery high. Not an all-time high, but it's in leg C, and it should test the 182.77 all-time high that was made back here in July of 2016. And UTX, which we remain long, is up 17 cents at 110.56 in leg E. Could call it /E/B, but we'll let it play out for the day. It's getting right into the resistance area. That's why this is a very important week. Hey, I'll be back. Basil Chapman, Tiger Emissions Hour. Dow's up 90.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yes, I had a question. Kevin said, hey, the TZA, what's with the TZA? This is the 3 times small cap bear shorts. And it's trading at 1942, up 7 cents. Yeah, this is a nice little move, and it's trying to get off the bottom. I still, I don't know what to tell you. I just I have to believe in my methodology because it works so many times that we are going to go to a leg D somehow or other. There was the chance it didn't do it, but you need 138.83 to and that'll start leg D, and then we start getting a bit more cautious. That's just the way I have to do it. Then another question was, do I have a chart of the QQQs? Look at this. Wrong one. That's not the chart I wanted. The chart I wanted was, let me see if I've got it here. Oh, man, I had a beautiful, oh, yes, I'll find it. Here it is. The QQ recent works. Let's go to market top comparisons. I hope this is the one. The question is, Basil, do you have a chart of the NASDAQ, NQ, QQQ going back to peak in 2000? The answer is absolutely. Of course, I have that chart. Wrong one. So get out of this, close the workspace, save yes to all, try it again. Right now, coda phase. We're in the coda. Okay, now let's see. There it is. So that's look, NDX 100. There it is. There. So that's the NDX 100. 4816, March of 2000 makes a peak F. Makes this beautiful, look at this, left side, right side. This is what I'll be teaching in the course. Folks, go to the front page of TFNN. The Salvation Army thing that we do here at TFNN is unbelievable. Give 10% and you get discounts. Everybody, it's a win-win situation. I'm going to be showing the cup. I'm going to be showing the inside wedge, how you choose, which way you choose it, how you can talk about the plumb line. I've already started that. And this went within 2 months of the all-time high over a period of 16 years and 15 years, I'm sorry, in August. And it just missed it at 46.34, about 160 points, 100 something points, 70 points away. And then it pulls back to peak E, has a very sharp pullback, holds the trend line. We're teaching about the trend lines. And where does it go? It goes to a leg C. So this is, in fact, a beautiful chart. The speed of all of this is telling me a whole bunch of things, which I'll be talking about over a period of the next couple of weeks. But the NDX 100, yes, I've got a chart right here. Look at the way trend lines work. Look at that beautiful trend line right there. And we've just broken above it. We've broken to all-time highs. And this says it's leg C in the monthly chart. So, well, as we're about to wrap up, well, we've got a minute or so. Let me just cover a couple of things here. The Dow, here we go. So I am anticipating how, I don't know, at some point within the next couple of days, we should get a higher high. We should get in a higher high in the IWM to go to leg D. The VIX index is saying to me that there's some buying here ahead of the Fed, just to be ahead of the game, and that this often when the VIX starts to rise before the market actually turns down, that's sometimes a heads up. I'm keeping that in mind. So we might start tomorrow morning, even before the Fed makes an announcement, we might start some preparations as to what I would like to do, because I would like to preserve our entry points, which were terrific in the Dow and the IWM. I'd like to maintain those positions if possible. I'd even like to add to them, but we might just be forced to take a short position in the meantime. Remember the OO chart that I did? I gave this to my subscribers this weekend. I said, oh no, woohoo! This is the New York Stock Exchange. It's almost about to break 11,254 for an all-time high. It's gone to 11,250, 4 points away. I mean, is that a beautiful technique? All right. We'll be back tomorrow. Have a great day. And keep in mind that you've got, whatever newsletters you're getting, go to the front page of TFNN. You'll help the Salvation Army. You'll help yourself, and you'll help TFNN. And you'll get your subscriber host at a discount. Thanks for being here, and have a wonderful day. And did I finish that? The question was Boeing. Oh, I didn't show Boeing. I'll show it tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,